So in the last class we were discussing capital gains, and 4 topics we have discussed in the last lecture. First topic which I discussed with you was the charging section of capital gain, which is section 45. Within section 45 there are many subsections, but 45 subsection 1 is a section where almost every capital gain income is covered, almost. But still there are some exceptional cases of capital gain which are covered in different subsections like 45 1A, 1B and so on. But in our course only 3 subsections are there: 45 subsection 1, 45 subsection 1A and 45 subsection 1B. 45(1) is a normal section of capital gains, where if you have transferred a capital asset, then capital gain or loss will be computed, or income will be computed under that capital gain. 45(1)A, that was related to the cases when you receive insurance compensation, and 45(1)B is when you transfer units of ULIP, unit linked insurance plan, which has been issued on or after 1st Feb 2021, and where the premium payable during any of the year is more than 2,50,000 rupees. So these 3 subsections of section 45 I have discussed with you in the last lecture. As I said just now, 45 subsection 1 is that subsection of section 45 which covers almost every case of capital gain, but still we have to read these 2 remaining subsections separately, which are special. After this topic, charging section, I discussed with you the second topic, which is meaning of capital assets, section 2 clause 14, that which are capital assets and which are not. Because if any asset is not at all a capital asset, we will not at all compute the income under the head capital gain. So to compute the income under the head capital gain, first of all, it is necessary that the asset must be a capital asset as per the provisions of section 2 clause 14. After discussing with you the meaning, I discussed with you the meaning of transfer, section 2 clause 47. That what are exactly transfer? Transfer doesn't mean only sale, even exchange is transfer. Relinquishment of capital asset is also treated as transfer, etc. etc. And the fourth point, or the heading which I discussed with you, was section 47, where there are some transactions which might be actual sale, but these are not treated as transfer as per section 47. And when these transactions are not treated as transfer, then there is no need to compute income under the capital gains. So these 4 broad topics I discussed with you in the last lecture. Let me write these topics for you so that you exactly remember that what we have discussed. Capital gain is being continued. So what topics we have discussed already? Charging section of capital gains, section 45 subsection 1, 1A and 1B. I have discussed with you the meaning of capital assets, section 2 clause 14. I have discussed with you meaning of transfer, (247), and last I have discussed with you the transactions which are not treated as transfers. Because when a transaction is not at all treated as transfer, then you don't compute income under their capital gain, because if something is not at all transferred, why there is a need to compute capital gain. So these four subtopics I have discussed. I hope it is clear. In case if you have any doubt, you can ask me. Otherwise, I'm proceeding to the next today's discussion in the next heading, fifth, kinds of capital assets. Since I know the meaning right now, what is the capital asset? I must know how many kinds of capital asset exist. There are two kinds of capital assets: short term, long term. Short term and long term capital asset. Some assets are short term and some assets are long term. Why I am bifurcating these in these two categories or subcategories, short term and long term? Because on these basis, short term, long term, I will determine short term gain, long term gain. On that basis, I will determine the tax, because short term are having separate rate of tax and long term are having separate rate of tax. The calculation of short term and long term is also different. So kinds of capital assets, short term, long term. Where it is defined in section 2 clause 42a. Section 2 clause 42a. It is defined in section 2 clause 42a. So let me show you the act, because sooner or later you have to shift to the act in your real life. So let us read the act. Hope the website of tax department is visible, and can you see section 2 clause 42a? Is it visible? Please unmute and reply.
Yes. Yes.
What you have said, is it visible?
Yes, sir.
Okay. Now read section 242a. Short-term capital asset means a capital asset held by an assessee for not more than 36 months immediately preceding the date of its transfer. That means if today I have transferred the asset, like if today is 4th November, so what is the preceding date? Last day, yesterday. That is if today is 5th November, then yesterday was 4th November. Till 4th November, if I have held that asset for not more than 3 years, then that asset is short term for me. Suppose I purchased any asset in 2004, and today I transferred it. So starting from 2004 till yesterday, till 4th November 2021, since this period is more than 36 months, that asset will become long-term capital asset for me. Had I purchased it in 2020 itself, 2020, and I sold it today, that means till yesterday, starting from 2020 till yesterday, the period does not exceed 36 months, the same asset will be treated as short term for me. I hope this is clear. But this 36-month period is 12 months in 4 cases and 24 months in 2 cases. So there are some types of capital assets where the holding period is not 36 months, it is 12 months, and that is written in exception number 1. Provided means exception, conditional. So what is the exception number 1 of section 2 clause 42a? Read it carefully. Provided that in the case of a security other than a unit listed in a recognized stock exchange in India, or a unit of the Unit Trust of India established under the Unit Trust of India Act 1963, 52 of 1963. These are the act number. In 1963, this Unit Trust of India Act, this was having numerical number 52. So before this Act, Unit Trust of India Act 1963 became the Act, in the same year 51 earlier acts would have been there. So that only tells you the number, otherwise it is of having no use. Or a unit of an equity oriented fund or a zero coupon bond, the provisions of this clause shall have effect as if for the words 36 months, the words 12 months had been substituted. I hope this point is a little bit clear to you that in four types of assets, what are those four? Which are those four? Listed security, unit trust of India, unit of equity oriented fund, and zero coupon bonds. In these four cases, when you transfer any of these four capital assets, then how will you decide long term or short term? On the basis of 12 months holding period. That's it. Next point, provided further. Now that provided further, I am not discussing it because that is not in your course now. It is not existing now in this year. So I'm directly coming to the exception number 3. Provided also that in the case of a share of a company, not being a share listed in a recognized stock exchange in India. Why? Because in case of listed securities, listed shares, you have 12 months period. So it is unlisted share or an immovable property being land or building or both. The provisions of this clause, which clause? Section 2, clause 42A, shall have effect as if for the words 36 months, the words 24 months had been substituted. This is the section 2, clause 42A, which tells me or which tells everyone whether the asset is a short term or long term and how you determine that whether it is short term or long term. So let me now simplify this act for you. The purpose was to show you the original section or the provision, because in future you have to refer these only, not the books. But now let me simplify that. So how do you decide whether it is long term or short term? It depends upon two things: type of asset and their holding period. So I'm preparing a small table for you and I'm doing nothing. I'm simply simplifying the provisions of section 2, clause 42A for you. That's it. So what is a short-term capital asset? A capital asset which is held by you for not more than 36 months, 24 months or 12 months immediately preceding the date of its transfer. That is short-term, otherwise long-term. So which are those assets where the holding period is 12 months? Type of capital assets. First, listed securities. I hope the font size is visible. In case not visible, please tell me. What do you mean by securities? Securities means shares, debentures, etc. These are securities. Note being a unit. What are these units? These are most commonly in mutual fund industry. When you are not in a position to purchase so many shares, because if you have limited money, so you are allotted units through mutual fund. The intermediary is mutual fund. They purchase shares and they allot to the different people who are invested in mutual fund units. So units are not covered in this first category, as it was written in the act, only listed shares. Then units of UTI. Then units of equity oriented fund. And fourth point, What was the fourth point, if you remember? Anyone who remember fourth point?
Zero coupon bonds.
Zero coupon bonds. These are those bonds which are having zero rate of interest technically. In these four cases, when you sell these, as one thing you must be clear in your mind, that what is capital asset? Everything in this world is a capital asset except very few items, like anything which is used as stock in trade, agricultural land in India, personal belongings except jewelry, some gold bonds, etc. Otherwise, everything is capital asset, whether listed share, UTI, equity oriented, zero coupon, everything is capital asset. In these cases, the holding period is 12 months. Then another category was of 24 months, and it was having unlisted shares. Second, immovable property. Being land or building or both. In these cases, the holding period is 24 months. And third, in remaining categories, $36 months. Then can you tell me what are the examples of remaining capital assets? Any example? Can you give me any example?
Debt mutual
So
fund.
jewelry.
Yes, debt mutual fund, very good. Debt oriented fund. Units can be for not only equity oriented fund, there can be debt fund which are covered here. Debt oriented funds. Jewelry. Any other? Etc. Please raise your hand if discussion till this point is clear, that now you are having an idea what are long term and what are short term. Please raise your hand if this point is clear. Okay, now next sixth heading of mine. This was my fifth heading and now sixth heading. Do you think that determining holding period is very easy, or anyone can decide what is the holding period, or anyone can tell what is the holding period? It is not so easy. It requires a little bit expertise. So my next point of discussion will be on this basis. Now type is easy to decide because it will be mentioned in the question. How do you determine the holding period? It's not so easy to determine it. It might not be an easy case, though it's not so tough also, but just by having a clear look, in the first instance, you might not get the answer that what is the exact holding period. So my next heading is how to determine the holding period of the capital asset. Held by the assets. How can you determine the holding period of the asset held by the assessee? Now, before I discuss this point, I will give you some examples and you try to tell me the holding period. Mr. A transferred a house to Mr. B. Mr. B transferred the house to Mr. C. I am talking about a house. The same house. The same house Mr. A purchased on 7th July 13 for rupees 1 lakh and sold the same house on 23rd September 14 for rupees 8 lakh. To whom? To Mr. B. To whom? To Mr. B. So what I will write with Mr. B? Mr. B purchased this house on which date? Can you tell me the date? Can you by default tell me the date when Mr. B purchased it?
23 September 2014.
Yeah, of course. 23 September 2014, because of course on the same date. Can you tell me for what price Mr. B purchased it?
8 lakh.
8 lakh. But it might not be the same in future, because that I will tell you later. Right now the sale value was 8 lakh, but the sale value might not be the purchase value for me. Why? Can you tell me why? Can you tell me the cases where might not, this 8 lakh value might not be the purchase value for me? Can you tell me that case where Mr. B might say that my purchase value is 8 lakh 50,000? Can you tell me that case when it can happen?
Commission charges.
Yes. For Mr. B, the sale value of Mr. A is not the actual cost. Mr. B might have to pay more amount. Maybe in 8 lakh, Mr. B might have borrowed some amount, so interest must have been paid. Mr. B might have paid some commission to the property dealer. So Mr. B's actual cost might be higher than the sale. Since it is the starting point of capital gain, I'm not taking typical cases, but you must be having one thing in your mind, that it's not necessary that the sale value might become the actual purchase value for me. Anyhow, sold on 26 March 2021 for rupees 50 lakhs to C. So what C will write? Purchased on 26 March 21 for rupees 50 lakh and sold on, I don't know when it sold. That is not relevant for me, because my previous year is 2021 and I'm concerned about only this period. So I don't know at what value it is sold. That is not relevant for me. I'm skipping this one. Can you tell me now who is the assessee? This is my first question. Can you tell me who is the assessee in my example? Anyone who
So
can tell me?
C,
C is the assessee. Why?
because he was having the property at the time in the previous year 2021 and sold it in 2021.
No. I have not mentioned when he has sold it. I have not written the date. The property is not yet sold. I have not written sold date. I don't
So
know.
in
But
that case, B.
yeah, B is the assessee. Why? Because who is the seller in my year? Who is the seller in my previous year? B. So assessee is Mr. B. This is one thing. Now, what is the sale price of Mr. B? Ignoring the provisions of capital gain, just a simple question that you have to compute profit. So the sale value of Mr. B is 50 lakh. Now, as I told you, short term and long term will change the way of calculation. So before doing the calculation, my first job is what? The asset is short term or long term. Can you tell me whether this asset is short term or long term? How will you
Long
decide
term.
whether the asset is short term or long term?
First, we'll determine the type of asset and then the holding period.
Yes. So two things are required. First, type of asset. Which type of asset is this?
Immovable property.
Yes, and for immovable property, how many months?
24.
Now, can you tell me whether it is held for more than 24 months or not? Can you tell me how will I check whether it is for more than 24 months or not? Any answer? How you have checked these dates? How will you check these dates? What you will write? How will you decide yourself? Because you don't have, I don't want to show you the provision directly. If I directly tell you that this is written in the act, how will you compare that? How will you compare? How will you make a good comparison that whether what is written in the act is nearby the same which is logical or not? So first you must decide that logically how you should have calculated it, and then you will compare it with what is written in the act so that you get an idea whether the language or the provisions given in the act are rational or not. So how you would have determined the holding period? Suppose you don't know the act. Any answer? So one thing is sure that date preceding the date of transfer. So what is the date of transfer to Mr. B? 26 March 21. So one thing is sure that I will check till which date? 21, but I will start from which date? That is necessary. Can you tell me the starting date now? Can you tell me the starting date?
23rd September 2014.
Yes, it is very easy. I as an assessee held this asset during this period, and since this period is more than 24 months, the capital asset is long term. Please raise your hand if it is clear. If this situation is clear, that in this example, it is very easy to compute holding period. And I can easily say that the asset is long term. Please raise your hand if this point is clear. Very good. Now, but can you give me the answer in my next example if I make some changes? I simply want to give you these examples so that I can show you that why it is not so easy always to determine the holding period just by having a look at the question, until unless you know the concept or until unless you think rationally and logically. So let me assume the same example, but I will now start making changes A, B, C. So let me assume example number 2, and then I will start telling you the provision. Let me assume example number 2. You must compare your mind with the provisions written in the act so that you can take a decision in future if you are getting some responsibility to make changes in the acts which have become so old, etc. But first you must train your mind in making a comparison whether what you think as a rational person is written in the act, or act is talking about something illogical and irrational and you are thinking something rational or not, rational or logical. So you must start comparing at this age of your life. Now example 2. Now B and C, I'll keep B and C same. Just think logically what will happen. B. I hope the font size is visible. Purchased on. Now I will make some changes. I will not use the word purchased now. I'm saying now got it under a will. By way of will, I have not purchased it. Maybe my friend or my family member has transferred this property as a gift or by way of will to me. On got it under a will on 7th December 2019. Sold it. I sold it now on 26th March 21 for 50 lakh to C. So Mr. C purchased it, own, of course, 26th March 21 for, of course, rupees 50 lakh. Mr. B, then Mr. A. Mr. A got it by way of gift on 20 October 2011, gave it by way of will on 7th December 2019. Mr. K purchased it you can see this chain now, purchased it on. In fact, this is a chain having very less number of people. Otherwise, in real life, there might be 12, 13, 14 different people who have exchanged their hands with respect to any property. Purchased it on 19 July 1997 for rupees 10,000. Gave it by way of gift on 20th October 2011. So these are receiving dates or selling, receiving, selling or transferring, receiving, transferring, receiving and not yet transfer. For C, you can write not yet transfer. So he gave, other person got, the same dates. He gave, other person got, same date. He sold, so another purchased, same date. He gave by way of gift, he got it by way of gift. He gave by way of will, he got it by way of gift. He sold, so he purchased. So this chain is continuous, you can easily see. And in real life also, you will find the chain normally continuous. Until unless some corruption or some type of evasion is happening. Otherwise, in real life, whenever any property, and see, when I use the word property, don't treat it as house property. Property means capital asset. Under the head capital gain, whenever I speak this word property, it is not house property, it is a capital asset. It can be jewelry, it can be car, it can be laptop, it can be anything. Property means not house property only, it is a capital asset. In this example, suppose this is the situation. Who is the assessee? Can you tell me who is the assessee? Who is the assessee? Remember, I am concerned with previous year 2021. Who is the assessee? That means the person who is going to pay tax. Purchaser will not pay income tax. Seller might pay if there is a gain. So who is the assessee in my example? Any answer?
Mr. B.
Mr.
B.
Yes, Mr. B is the assessee, correct? Why? Because Mr. B is the seller in my previous year, which is 20th March 21. One thing is sure that Mr. B is the seller. Sale value is also given. But how can I do the calculation until and unless I know that whether this asset is short term or long term, because I told you the calculation of short term and long term is totally different. So what I need to know, which type of asset is this? Since I'm assuming it as house property, so type of asset is clear in my mind. House property. Can you tell me the holding period now? Think logically. I will not tell you the provisions. Provisions I will tell you later on, but we will compare whether what a logical thinking is that written in the act or not. Can you tell me the holding period of this asset? Mr. B is a little bit confused and he has come to you to seek your opinion. How will you tell Mr. B that this asset is long term or short term? How logically you will decide long term, short term? I'm waiting for your answer. Just think and try to tell.
So the holding period in this case should be 7 December 2019 to 26 March 2021 because that's when he had the ownership rights to the property itself. We'll compare it to the threshold of 24 months. We'll find that it falls short. So this was short term for him then.
Okay, is she correct? She says that holding period is 7 December 19 till 26 March 21. How many of you, it is wrong basically. So how many of you are not agreeing to this period? If they are not agreeing, then can they tell the correct or more logical way? This is wrong period. This way is wrong. So can anyone, if you are also thinking that this is the holding period, then you are also wrong. So can you think differently now that what is more logical in this case?
Sir, from 19th July 1997, because then that's when the holding period actually starts. When we started basically paid for the asset and then it got transferred ultimately.
So you are saying 19 July 1997 till which date?
25th March
20?
2021. 5th March.
Yes. Now, on what basis you are saying that this is more logical?
Sir, usually in India, like property gets transferred from grandparents to their parents and then children. So ultimately, let's say Mr. K is grandfather of Mr. B, so he paid for the property.
For example, he is not the grandfather, he is a different friend. So that is of no use. Whether that person who is transferring by way of gift or will is family person also, might be my friend is there. All these are unrelated people. Now, these all are friends. Then what?
But then also Mr. K paid for the property, and then from there, I guess the holding period should be calculated.
But why? Why? Now, let me tell you why this is the correct point. But let me tell you the exact reason. Or you might have told the exact reason, but you might not be getting the exact wordings. I am going to pay tax in the previous year 2021. On which date? If I am B, then on which date I am going to pay the tax? Can you tell me the date? Is this date clear? Please reply. Unmute and reply. Because I can't see hand raised when the full screen is visible. Is this date clear that this is the date on which income will be computed under the capital gain? Is this date correct? 26 March 21. Hurry up. Is this date correct? Unmute and reply. Mr. B is computing the capital gain on 26 March 21. Am I right or not?
Yes, sir.
Now, who was the last seller or last person who has transferred? Mr. A. On which date? 7 December 19 was the earlier transferring date. Now, can you tell me at that time was capital gain computed on 7 December 19? Was capital gain computed on 7 December 19?
No.
Hurry up, I'm asking you a question. Everyone can unmute and reply. Was capital gain computed? So my question is, was capital gain computed on 7 December 19? Any answer? Was capital gain computed on 7 December 19? Any answer?
No, sir.
Why?
So there was no involvement of money.
No, that is not the reason. Because the transaction. Any answer?
Sir, because we'll be calculating the tax in the assessment year.
नहीं नहीं नहीं, वो तो उस साल भी तो कोई ना कोई असेसमेंट ड्यू तो तब भी रहा होगा ना, वो तो एक अलग बात है। पर 7 दिसंबर 19 भी तो प्रीवियस है, 1920 है, ईयर तो तब भी कोई ना कोई होगा। इज इट क्लियर संजय?
Sir, I was thinking that we calculate the year of the we calculate the tax the previous year and the next year. That's why we calculate the tax.
नहीं नहीं, प्रीवियस है 1920 है तो कोई बात नहीं, असेसमेंट है 2021, कोई ना कोई ईयर तो रहा ही होगा ना। रीजन क्या है? वाज कैपिटल गेन कंप्यूटेड? आंसर इज नो। नो, कैपिटल गेन वाज नॉट कंप्यूटेड ऑन 7 दिसंबर 19 क्योंकि ट्रांसफर तो थी, because the transaction was not treated as transfer as per section 47 clause 3. Though it was transfer, if you remember the meaning of transfer, it was transfer. Ownership is changed legally. It was transfer under 247, but it was not treated as transfer as per 47.3. Remember last class? This was the point. Is it? Do you remember now? Though it was transfer, क्योंकि transfer means क्या है? Sale, exchange, relinquishment, anything. It was transfer. But under section 47, there are around 24 or 5 such transactions which will not be treated as transfer. So what I have written that, though on 7 December 19 also, the property got exchanged, or not exchanged, property changed legal owner. Logically, it is a transfer. Capital gain could have been computed had it was not covered under section 47 clause 3, because this transaction was not treated as transfer. Is it clear? If yes, please raise your hands. You have to think now rationally. Is it clear? If yes, please raise your hands. It was covered in the meaning of transfer, but since it was also covered under section 47 clause 3 and it is not a transaction which is to be treated as transfer, I had no option, but I cannot compute capital gain. Now on the same lines, I can say that was capital gain, or I am asking a question now, a different question. Was capital gain computed on 20th October 21? Can you tell me, was capital gain computed on 20th October 21? Any answer?
No.
Why?
Transaction wasn't treated as a transfer.
Yes.
Same reason.
Same reason. Capital gain was not computed on 20th October 2011 also, when it changed legal owners by Mr. K, because same reason, the transaction was not treated as transfer. Same reason, transaction was not treated as transfer as per 47.3. Now Mr. P.K. also would have purchased it. I don't know the name of that person, but, or let us assume that this person was Rahul. Sold on 19th July 1997 for 10,000. Now I am asking a question. Was capital gain computed on 19 July 97? Can you tell me? Was capital gain computed on 19 July 97? What is your answer? Yes or no? On 19 July 97, was capital gain computed by Rahul? Yes or no?
Yes, sir.
Yes. So another point is yes. Capital gain was computed on 19 July 97. On 19 July 1997 by Rahul. Because this transaction is not that transaction which is not treated as transfer. It is a legal sale. You have sale value. It is nothing like gift or will. So it was computed at that time. When it was computed at that time, Rahul would have counted cost also, cost of purchase. Rahul would have counted cost of purchase. But after this date, income tax department never got the tax on this property. From 19th July 97, what happened? At that time, department got the capital gain or computed the capital income under that capital gain, assuming the sale was 10,000. After this, when another date came, 20th October 21, 20th October, not 21, 11. At that time, department didn't got any calculation. After this, which date came? 7 December 19. At that time also, department didn't got any computation of income under that capital gain on this property. When on 26th March, now when this property was finally sold, then income tax department will get some calculation of capital gain. And now logically what will happen, when this person Mr. B will be computing income under that capital gain, and when he will say that what is holding period, since the last time when on this capital asset capital gain was computed on 19 July 7, 1997, after this in these two dates the transaction was not treated as transfer, so technically these dates does not exist. So now what is the holding period? How do you determine the holding period? You start now from 19th July 1997 till which date? 25th March. It is logical also, because between these dates or all the dates between this period doesn't exist in the eyes of Income Tax Act. So the holding period for Mr. B becomes 19th July 1997 till 25th March 21. And since this period is more than 24 months, Mr. B will say that my asset, this asset is long-term capital asset. Please raise your hand if this point is clear. If not, ask me the doubt. Is it logical also? Just because it is written in the act, it is not the correct thing. Do you think that now, yes, it is more logical and this should be the holding period? If yes, please raise your hands. Otherwise, you ask me the doubt. Okay. Next point. So now you can say that what is more logical is exactly what written in the act also as far as this section is concerned. I'm not saying that it is true in every section. There might be some sections which you might find illogical, but this is that section which is raising the correct point, because if these between these two dates when the transaction was not at all treated as transfer in the eyes of the Income Tax Act, 19th July 1997 was the last date when sale of this property happened. After this, now in the eyes of the Income Tax Act, the sale is finally being happened on 26th March 21. So now everything will start from 19th July 1997. So now I can say that it is required to read this topic in detail. How to determine the holding period of capital asset held by the SSE. I gave you one example, and do you know in this example which words were coming repeatedly? The words which were coming were will, gift. Because of these words the problem arises. Technically it is a section 49(1). I will teach this section to you with I will teach this section to you later on, but these situations are written in section 49(1). Whenever capital asset is received by way of will, gift, etc., these are some special situations where the purchaser doesn't pay anything. The purchaser doesn't pay anything. So all these situations are written in section 49(1). And now let me tell you from where I will teach you determination of holding period. It is nothing but the same section, section 2, clause 42A. Let me share with you the Income Tax Act. This is what my Income Tax Act section 2 is, and if you see this explanation of section 2, clause 42A, what the explanation says: in determining the period for which any capital asset is held by the assessee, in case of shares, in case of assets. Now there are so many different cases: A, B, BAC, D, E, F, G, H, HA, HB, HC, HD, HE, etc., etc. All are not in our course. In our course, we have 5 to 6 different special assets for which we have special way to determine the holding period. So I will tell you those which are relevant. And in this example, technically, I have discussed this B clause. Read it. If you read completely explanation 1, it says, in determining the period for which any capital asset is held by the assessee, then in the case of a capital asset which becomes the property of the assessee in the circumstances mentioned in subsection 1 of section 49, gift, will, etc., these all are written in 49(1). So in this example, what I did, I went back to the previous owner Rahul. Same is the thing which is written here. There shall be included the period for which the asset was held by the previous owner referred to in the set section. Can you tell me which set section? What do you mean by this set section? SAID, set section. Which section? Which section? Hurry up, tell me which section is this?
Sir, section 49.
Which section?
Sir, section 49.
Yes, 49. So click it. So this is telling me the meaning of previous owner, section 49. Click it. And what is in this set section 49? This is 49. So what it says, in this subsection, which subsection? Subsection 1 of section 49, the expression previous owner of the property in relation to any capital asset owned by an assessee means last previous owner who acquired it. What do I mean by acquired it? Who purchased it. So when I come back to my example, I applied the same concept which is written in the act. So what you applied logically is the same thing which is written in the act, that when you compute the holding period in these cases, when you compute the holding period in these cases, you determine the period for which or when the previous owner acquired it. Who is the previous owner? Now, if you go by the English language, previous owner is A, but that is not the previous owner as per Income Tax Act, because A also got it free. Then previous owner K, no, or what? Yes. So K is the previous owner because K actually purchased it. So I am using the same concept which is written in the act. K purchased it on 19 July 97. So when I applied this date, I applied the same concept. So let me write it for you. It will take only 5 minutes more. That now when these two examples were there, now the heading is how to determine the holding period of the capital asset held by the assessee. I told you that there are 5 to 6 cases which we have to study in our course. So I will discuss now. I'm writing my first case, point number A. So let me give you a number. If it is my sixth heading, so I'm writing 6.1. I'm making a heading. How do you determine the holding period in case of capital assets which have become the property of the assessee? Can you complete the line? Can you try to complete the line that what I am going to write here? Which have become the property of the assessee? Can you tell me what I will write here? In these circumstances mentioned in which section? Try to tell. In these circumstances mentioned in which section?
49.
Yes, very good. But specifically, because in 49 also there are so many subsections, 49.1. How do you determine the holding period in those cases where you got the property because of those situations mentioned in section 49.1? For the time being, you should remember only these words: gifts, will, inheritance, because for your level only these three will be used. Now, can you tell me that how do you determine the holding period? The period for which the capital asset was held by the previous owner. The period for which the capital asset was held by the previous owner shall be included while determining the period for which the capital asset was held by the assessee. So had I told you this line in the beginning, you would not have imagined in your mind that what logical is the way to compute the holding period. Since first we discussed logically, now you can relate it, this provision, with that logic, and it is absolutely correct. So when you learn something and then you try to attempt, then in that case your mind doesn't think in different directions. So first of all, you should try to imagine what different possible scenarios are existing. Then you relate it with the exact provision written in the act, and then you make the comparison that yes, is it logical or not. So I think that's sufficient for today's discussion. I have discussed only first point, how to determine the holding period in these cases. I will discuss 5 to 6 different cases where, if like in liquidation, what is the way to determine the holding period? When amalgamation happens, what is the way to determine holding period? When demerger happens, what is the way to determine holding period? When inventory is converted into stock in trade, what is the way? When inventory got converted into stock in trade, what is the way to determine the holding period? Or when asset got converted into inventory, what is the way to determine the holding period? Something might be an asset for me, like jewelry, or not jewelry. A laptop might be a capital asset today, but now I wanted to change my business where I will sell and purchase the laptop. So I will convert the same laptops which were for me capital assets now into stock. In those cases, how do you determine the holding period? When you convert your debentures, etc., into shares, what is the way to determine holding period? So there are around 13 to 14 different cases where the way to determine the holding period is explained in section 2 clause 42A of the Income Tax Act. But I will discuss only 6 or 7 maximum which are relevant for Become Owner semester 3. So that I will discuss with you in the evening today when I will meet at 5 p.m. Till then, goodbye. And in case if you have any doubt, you can stay here. Otherwise, we will meet in the evening. That's all from my side for this lecture. Goodbye.